Alrighty, traders. Good afternoon, good morning, good evening. Welcome to Friday's trading session here as we go ahead and take a look at the markets right here. We're going to go ahead and dive into some trade opportunities this morning as we look at NQ as well as some currencies. And we're going to build up a strategy that we're going to chase after $120, which is about 50 ticks in the market, in the futures market. And then in the Forex market, all we're doing is chasing after 20 pips in the Forex market. So quick short trades. Let's go ahead and check it out after this. Alrighty, traders. Well, good afternoon, good morning, good evening, and welcome to the session. Once again, it is Friday, and the objective here in the market, both futures and forex, is to grab a few pips out of the market and get out of that trade as soon as you possibly can, unless the market's shown stronger momentum in one direction. Now, traders, I'm in the trade already here on NQ. I'm going to go through some steps that I'm going to look for in placing a trade. The one thing that you got to understand here is that future trading is very volatile. It can turn against you very quickly, but it can also go ahead and move in your favor very quickly as well. And you can generate a lot of profit. Now, in this trade right here, traders, I'm going to be honest with you. I'm going to be straight up with you. There's the objective to chase after 120 pips $120 per day. Now, if you do that for a week, that's $600. If you do that for a month of 5 weeks, that's $3,000. Most trading funded accounts, specifically a $50,000 trading funded account, you need to make around about $3,000, which is the benchmark for passing an evaluation account. And so doing that, chasing after the 120 pips is $120 per day gives you that opportunity. Now, I've been doing something a little bit different. I've already proven how we can make $120 a day and how you can pass a funded account within 1 month. Now, what I'm really doing now is I'm testing a new strategy out to be able to capture $1,000 a day to pass your evaluation phase in 3 days. And I'm willing to go ahead and blow up my account. It doesn't really matter to prove that this can be done. And so that's exactly what we're going to be talking about today. We're also going to be talking about some trade setups based on some Forex setups and what the dollar's doing and how we can go ahead and trade that and make some short profits. Now, traders, everything we're going to do today is going to be live. It's going to be exactly what I would do. In the Forex account, it will be live accounts. And in the futures account, it will be funded account. These are some accounts. I want to be upfront and real with you. All right. These are some accounts in the futures. And what the objective is to help traders to understand how to pass these funded accounts so that when you get funded, you've got some capital to be able to trade with. Now, let's go back a step here, and then we go back to the future setup right here. So firstly, number one, the one thing that you want to know is you want to know where the draw of liquidity is going to be. Is it going to be up, down, sideways? Not sideways, but up or down. Now, when I look at the setup here on the 4-hour time frame, the one thing we want to also do is we want to mark off the highs and lows of the 4-hour and the 1-hour time frame, but also you want to go ahead and mark off the highs and lows of the sessions, the London session, the Asian session, and possibly the New York session too. But the London session is of a lot of, in fact, I pay a lot of attention to the London session highs and lows, because what ends up happening, and this is what you got to understand, is that when the market takes out a high, the market tends to want to then go ahead and reverse to the next low. And so paying attention to these highs and lows, whether it's session highs or just highs and lows based on the time frame, the higher time frame, it creates opportunity for us to go ahead and target the other side of the coin, so to speak. So let me go ahead and mark off a couple of things here. So number one, let's go ahead and mark off and what I'm going to do here, traders, I'm going to go ahead and do a complete housekeeping cleanup right here and start off from scratch so that you can understand what I'm looking for here. And so this is the 4-hour time frame. The one thing I'm going to do is I'm going to definitely want to mark off this area right here. Now, granted, traders, that this area is very far back down. All right, so we've got sell side liquidity all the way down there. Now, let me give you a short description what sell side means. All right, when we talk about sell side, understand that when traders are buying, this is where they go into place their stop losses. All right, so stop losses are going to be placed below this area. And these stop losses are opposite orders, right? So they sell orders down below here, all right? So if they're buying, these are sell orders. Now, what also traders do is traders play breakout trades. Now, if the market sideways here, and you trading the market sideways, and let's say you trade the bottom, your stop loss will be down here. But also traders that are expecting the market to break out, what are they doing? They're looking to place sell stops right here, right? So this is going to be sell stop orders. So there's a lot of sell orders sitting below this area, whether it's a stop loss or whether it's a sell stop to get into the market because they're playing the breakout of that range. So remember, when we talk about sell stops and buy stops, all right, or we talk about sell side liquidity and buy side liquidity, it's because we're anticipating stops to be at those areas, or at least sell orders to be at those areas, and buy orders to be above the area. All right, so here we have sell side. Now, I'm not going to mark off this buy side right here, all right, but I'm going to mark off this one right there. This high right there is what I'm going to mark off. And you can see that we have already had the market extend past that buy side. All right, so we've already swept the buy side. So if that's the buy side right here, then I'll be looking for price to come back down to sell side. Now, sell side is all the way back down here. This is where we see sell side here on the 4-hour time frame. I'm going to mark it off over there and over there as well. So I'm going to mark this off as sell side, and this one off as sell side as well. Right, so we've got sell side, both sides here. We've got buy side at the top there. Market's already swept the buy side, and we can see price possibly want to go down. Now, another thing that I want to go ahead and mark off here on the 4-hour time frame is that we noticed that when the market took out this buy side here, we had an expansion move, and that expansion move created a insufficiency. All right, it created a fair value gap here. So I'm going to mark off this fair value gap as well. All right, here it is. And we're going to mark it off as the 4-hour fair value gap. Why is this important? This is important because the market likes to rebalance equilibrium, but it also likes to rebalance insufficiency. And so you can see here, as price rejects this buy side, we're expecting the market to want to come back to sell side down here, all right, or at least to rebalance insufficiency. All right, so this could be a certain target. Now, I also want to make sure that everyone understands, right? The objective is this, and this happens in futures and Forex, but what ends up happening if price to buy side right here, the objection is to look for a reversal and then look for price to move back down to sell side. All right. So whether we are trending up or moving into consolidation here, we're still looking for the same sort of setups. All right. So when the market takes out buy side here, we're looking for the reversal and we're looking for sell side to be swept. So it doesn't matter if we're trending, all right, up or down, or we're moving sideways. The objective is, if we see buy side being taken out, we're looking then for the market to move to the other side to take out sell side. But then what we want to do is we want to see some sort of reversal. All right. So you've got to establish market direction and then go ahead and establish an entry point. Okay, so now that we've marked off buy side and sell side right here on the 4-hour time frame, and we've also marked off our fair value gaps in over here, let's go a little further. In fact, I'm going to go to the weekly time frame here. All right. So so I want to go now to the 1 hour. Now, traders, the 1 hour, we want to mark off session highs and session lows. All right. But we also want to mark off highs and lows. So here you can see here, this was around about 4 o'clock in the afternoon. So this blue area here is marking off from 4 o'clock in the afternoon yesterday all the way through to 9 o'clock this morning. And so this gives me my Asian high. So we've got an Asian high sitting over here, right there. You can see the markets are already taking out the Asian high. This is the London high. Price has already swept the London high. So where's the London low? London low is sitting over here. Now you can see right here, this is where my take profit is. My take profit is looking for price to come down to this area. But traders, we can go a step further. Because we see that there is a low down here, right? This is going to be sell side right there. We could probably expect the market to reverse all the way back down to this area to retest our fair value gap. Now, this is the one part that traders need to understand. What is your objective? Is your objective is to chase after $1,000, $2,000 a day? Or is it just to go ahead and chase after 120 pips a day, $120 a day to pass your evaluation in 1 month? So everyone has a different objection, all right? And sometimes you have to understand what that is, but also understand this. The market's only going to give you what the market has to offer. Sometimes we're looking for that $1,000 move, and the market's only giving you a 600 or an 800 move. And what ends up happening is we hold on to a trade only to give back and then lose on that trade. So very important trade. You've got to understand that you have to have an objective and stick to that objective, but also be realistic about what the market's going to offer. Now, here in this trade right here, the one thing that we want to make sure about is that we're marking off those highs and lows. So this is going to be, and I'm going to change this over. Instead of making it buy side right here, I'm going to switch this over to mark it off as London. High. All right, we got it as London high. I'm going to mark it off in the middle of this channel here. There we go. London high. Let's go actually make it a different color here as well. We could make it that color, and there we go. And we're going to go ahead and make it dotted line. All right, perfect. All right, there we go. So now we know we've swept London high. And so price is looking for the London low, which is over here. Let's go mark off London low. This is going to be our London low right here. And you can see prices respected it, but we have not taken out that London. Hold on, I'm going to move my profit taken. I'm going to move it just below there. And I'm going to just mark this off as, this is going to be a London low right here. There we go, London low. All right. So we've got a London low, London high. See, the market's rejected that. And now what I'm also going to do here is I'm going to mark off this sell side liquidity down here as well. This becomes important because remember, traders, when the market takes out buy side, it looks to hunt for sell side. Sell side's right here. So this is actually, in fact, I'm going to mark this off as my possible draw, because as price stays below this area, and this is how you're going to look at it right here, we've got a high, low, high, and now price is looking to take out sell side. This will probably be the draw of the day as we look for the market draw. But then also we can see that we've got a fair value gap sitting in this area. This is our midpoint. So the market's going to come into this area. Now, again, what is your objective? According to what I have right now, if I look at this setup that I have, right now if I've entered here and my target is here, all right, that's 115 ticks. Now let's do the math. 115 ticks times that by $2.50, that's $287. Now, if I'm chasing after a $1,000 move, then what I've got to chase after is 400 ticks. So if I'm looking for 400 ticks, you can see here, does the market offer me 400 ticks, even if it goes to the midpoint of the fair value gap? And the answer to that is no, only 313. So traders, which means that I have to realize that I'm probably going to be in these trades much, much longer. All right. Or at least not much longer, but I'm going to have to trade multiple times in order to reach my target. All right. So let's go. All right. So we're in on this trade right now. We're chasing after the sell side. I can go ahead and move this to sell side down here because traders, I'm expecting an expansion move through the London low and then get down to my sell side right down here. Now, as I go to the 5-minute time frame, I'm going to look to see if I've got any sort of change in market structure. Now, I'm looking over here, and I see here we have a new high here, taking out the London high. And notice right here, traders, notice that the market is not breaking structure yet. Here is break of structure. I've got to see the market break the structure. If we don't see break of structure, traders, we might have to just take what we've got. In fact, it wouldn't be unkind if we take our profits off the table because we're not breaking through. All right. Oh, hang on. Just as I said it, we're starting to break through. Let's see if it does. Now, this is a 5-minute candle. I've got 3 minutes left on this candle. I can give it some time. But I'm up $170. It dropped down to 190 at one stage. But you can see here, now we haven't seen a break of structure yet. So I could say, hey, listen here, this is a good time to go ahead and close out, take some profit off the table. And if it breaks the structure, we can re-enter into the trade because we know where our objective target is. So, okay, it doesn't look like it's trying to break through as of right now. Another 5 minutes, got 2 minutes left. And this is what's important. I want to see expansion move through that London low. It's got to expand through there. I'm not looking for a candle that's just showing a little bit of. I'm going to go to the 1-minute time frame. Yeah, we're seeing a little bit. Okay, so we got to see a break of that. So it's trying to break through. It's not. I'd like to see a much more conviction move or conviction in this move. All right, traders, I'm going to go ahead and grab that profit there. And so what I'm going to do here is I'm going to look at this 1-minute time frame here, and I'm still interested on getting in on a sell. But what I'm going to do here is I'm going to look at this 1-minute fair value gap that's formed here, because here on this 1 minute, let's go ahead and mark it off as a 1 minute. We're going to probably see, because of the market's holding up here, we're probably going to see the market come back to liquidity up here because this is going to be liquidity, rebalance this move. And what I could also do is take a look at from the top to the bottom of this move. And you can see here that equilibrium is also sitting in this region. So I'm going to see if we can get back up to this area. I'm going to go back to my 5-minute time frame. And I want to see if we get any conviction. But you see here, traders, the London low is still a target. Price is still wanting to go to the London low, but we may want to go ahead and do some rebalancing. And also, it could be, even if it's a 1-minute time frame, a sweep of the liquidity that's sitting above here. So we've got some buy-side liquidity sitting here that price is going to want to sweep, then turn around and head back down south. And traders, the one thing you have to understand is that I'm still a seller in the market. I'm still looking for the market to move south. Because why? And because I've already established my draw of liquidity for the day, and that is that we're expecting price to come down into this fair value gap here. In fact, the first target would be sweeping liquidity here and then taking out this fair value gap. Now, what I'm really looking for is a break of structure. Okay. Once we get the confirmed break of structure, then we could get a retest and the market could go back down south. Now, there's two ways to trade this. If we see a break of structure, we could go ahead and trade the breakout, or we could wait for the pullback. The most ideal place is to wait for the pullback. And the reason for that is, unless you're scaling into this trade, all right, you want to make sure, look at that. All right, this is the 10 o'clock candle right now. So see how quickly the market went back. Now remember, what am I? I'm still a seller. I'm going to go in on a short here. The market's come back up here. I'm going to go in with a short again. I am still a seller. Despite of this big spike that we saw here, I'm still looking for price to sweep the sell side liquidity down here. I'm going to mark off my sell side right there. I went in on another sell. And traders, I want to go ahead and also say this though, all right? I'm being very aggressive with my SIM account. And I'm going to tell you why. Because traders, if I blow up the SIM account, it's going to cost me $49 to reset that SIM account. So my objective is to pass this valuation as quickly as I possibly can. Because can I make $500 in a day with a live account? Yes, I can. And so if I can make $500 in a day, then that means I can reset my funded account 10 times and I can make that up in a day. So am I worried about paying $500 for a SIM account? No. All right. So I'm being aggressive in this account because I know that once we pass it, it's going to be really easy for me to go ahead and make some profit. All right, good. So we did get the market come back up here. This is the 5 minute. We've got about 3 minutes left on this candle. Let's see if we can get a break of that London low. And I'm still chasing after the sell side down here, which is right there at that fair value gap, sitting here on the 4 hour. All right. Now, remember, this is a 4 hour fair value gap, which means that the market is not going to just do this and spike up. All right. It may just go back inside this area and then go ahead and move north. All right. So we could have the market doing a little bit of a downside move and then turn around and heading back up north, especially when you're looking here on the 5 or 1 minute time frame. All right. So we are up in the money on this. We're in the money on this one as well. Now, a lot of traders go ahead and move their stops to break even here. I don't do that. Not on my SIM account. All right. On the SIM account, nope, I don't do that because what I do not want to get is this. You see this cleaning up stops? Believe me, there are some stop orders placed over here above this fair value gap here. And because there is, this is what we call a liquidity sweep. All right. So on a SIM account, traders, I'm willing to go balls to the wall and not even worry about blowing up the SIM account. All I want to do is I want to follow a set rule. And my rule is identify my bias for the week, for the day. Once I establish the bias of the day, then I'm looking for bearish PD arrays to sell off bearish PD arrays because my bias is bearish. I just want to go ahead and look for sell side. Now, traders, remember also, I wanted to also make sure that I took out a high, which was our London high. And because of that, we're looking for the market to take out the London low. So London low is my first objective here. You can see here, there's a lot of equal lows here. Therefore, there's a lot of liquidity here. And because of that, I'm expecting an expansion move through this and hopefully drop back down to my sell side liquidity where my target is sitting at. Now, I will go ahead and say this. I'm going to go ahead and put in a buy stop here because what I'm going to do is as soon as the market breaks through that London low, I'm going to bank in some profit here. There it is. London low taken out. Now, I've gone ahead and banked some profit in here. Actually, you know what, traders? I should be good right now. I'm going to take this profit. And let me see here. I've banked in some profit right here. I'm going to see if we get an expansion move through this. If I don't, I'm going to have to start taking profit. Come on, keep moving. We should move quickly to that sell side. If it doesn't, I've got almost like a 10-second rule. If I don't see the market expanding through that low, it's time to cash in. And traders, I'm going to cash in and take my $290 right there. Actually, 310. All right. So I took profit before sell side. Okay. Just in case sell side doesn't get swept and market turns around. I know that's the draw, but it might give me a third opportunity getting on this trade. So far on this in today's trading, we've managed to make $496. So I'm halfway to my target. All right. And this is not where we're going to stop. Well, if you're chasing after your $120 per day, do the math. $120 per day. Do that for 5 weeks. You're making $3,000. So if you want to pass your funded account, that's how you do it. Exactly. Traders, there is no hidden secrets, all right? All right. If anyone's saying there's some major hidden secrets of how to be able to trade the market, it's very simple. Understand why price moves and where price moves to. How do we understand that? Number one, we identify the draw of the day, right? We identify the draw of the day. Number two, we understand we then only trade in that direction only once the market takes out a high or low. Could be session highs or lows, could be 1 hour high or low, and it could be a 4-hour high or low. When the market takes out those highs, then you look for price to move to the other side, and that'll be your draw of liquidity. All right. So your draw of liquidity is when those highs are taken out, a high is taken out, and then the other side is where you go into draw to. All right. Traders, let's go ahead and take a look at this is our futures now. Now, if you're interested in getting involved in futures trading, if you're interested in know a little bit more about a company, go ahead and check our website out. The website is TradersNetworkClub.com. All right, TradersNetworkClub.com. In fact, traders, for $297, you can get access to all our products, 3 trade replicators. You can get involved in our live futures trading, but also you can get access to our trading bots that you can trade Forex using our trading bots and have it set either to manual or automatic. There we go. See sell side liquidity being swept here. Now, if you're interested, let me go ahead and post something here in the chat. And I'm going to post just the website. Or you can go ahead and send us an email. Actually, in fact, I'm going to go ahead and post this. Here's an email. Send us an email at support@TradersNetworkClub. Also, traders, you can go ahead and if you want to know a little bit more, send us an email. We'll send you a link to schedule a Zoom call. And we'll actually go ahead and do a Zoom call with you and go through everything that we offer from top to bottom. All right. All right, traders. Let me go ahead and take a look over here. Oh, yeah, we go. Here's our website. And for those that are looking for, there's a website. Check out TradersNetworkClub.com. There's the ticker down there below. All right. All right, traders. Let's go ahead and take a look at some Forex opportunities here. So let's go to the US dollar CAD right here for a minute. And I'm going to go to the 4-hour time frame. So traders, the one thing that we teach here at Traders Network Club is that we understand that the market moves in different waves. But not only do we see the market moves in different waves, but we also understand that price has 3 phases: accumulation, a manipulation, and then distribution. These 3 phases is how we identify where our draw of liquidity is going to be, right? So you always have to, no matter what time frame you're trading, you always have to try to identify where the draw of liquidity is. So when we're trying to identify the draw of liquidity, AMD helps us to identify what that means.